Julian Jessop is here, independent economist. Julian, very good morning to you.
Good morning.
Good to talk to you. I know you've got plenty to say about Rachel Reeves and the state of the economy and what happened yesterday at the Bank of England. Let's have a quick look at what Rachel Reeves said about falling interest rates.
I welcome the fact that interest rates have come down today. That's good news for homeowners, good news for businesses. And interest rates have now come down 5 times since Labour came to office, in part because of the stability that we've managed to return to the economy after the chopping and changing, the mini budget under the Conservatives and Liz Truss. And what that means, that 5th cut in interest rates, is that if you're taking out a mortgage for £215,000, you're going to be paying on a variable rate around £140 less a month than when we came to office just over a year ago. So this is good news for people wanting to get on the housing ladder, people remortgaging, and also businesses borrowing to grow.
She neglects to mention, of course, that stamp duty has gone up massively. So even if you are able to get a mortgage, which is increasingly difficult in this country, you're not actually going to be saving any money anyway. Julian?
Well, I find the whole thing maddening, particularly coming from Rachel Reeves, who used to be a Bank of England economist. There are 3 obvious things to throw back at her. One is that, yes, we've had 5 interest rate cuts in the UK since the general election, but we've had 7 in the euro area. European Central Bank has cut interest rates to just 2%. So there's a global interest rate cutting cycle, and the UK is actually lagging behind. Secondly, she refers to mortgage rates. And it's true, of course, if you're on a mortgage that's directly tied to the Bank of England's base rate, then your rate has fallen. But most people aren't on those sorts of mortgages. They're on mortgages that depend on where interest rates are expected to be over the next 2 to 5 years. And those mortgage rates have barely budged at all. Right. And in the meantime, the government's cost of borrowing has actually gone up. So a lot of the interest rates that really matter for the economy are either flat or higher under Labour than would otherwise have been. But the final and most important point is, why has the Bank of England cut interest rates? After all, on the bank's own forecasts, inflation is heading to 4%. So that's twice the official target. And that's not good news. Well, the reason they're cutting interest rates is they're so worried that Labour policies are going to tip the economy into recession because businesses are having to pay much higher taxes than they were before. So the only way that the government can claim credit for these interest rate cuts is that they're causing the economic downturn that's spooking the Monetary Policy Committee.
Right. And of course, we've got, as you say, much more kind of effective and serious financial conditions going on around whatever it is that the Bank of England are doing. And I know you were saying yesterday, I think, on social media, that if you were at the Bank of England, you wouldn't have actually cut the interest rates because it's not helping the economy, particularly when inflation is going up.
That's not. I'm not quite sure where that came from. I would actually have voted for a 1/4 point cut this week, as did a small majority on the Monetary Policy Committee. I think it was important to cut interest rates to provide a little bit of confidence that things are still going to be okay. I think the broader point, though, is it probably won't make a lot of difference. The markets had already priced in that interest rate cut. Yeah. So, if anything, actually, the markets reacted negatively to the Bank of England's relatively pessimistic forecasts for inflation going ahead. Right. So I think the Bank of England was right to cut interest rates, but I wouldn't herald it as good news in itself because of the backdrop that's causing the bank to cut rates, namely concerns about recession, trumping fears, or the reality, in fact, of rising inflation.
Well, this is the thing. I mean, we've got stories this morning about food inflation going up, and whenever I speak about it and people tell people it's running around about 4%, people always say to me, well, if you go into the shops, it's actually a hell of a lot more than 4% because, things that you used to buy, and there's pictures of some olive oil. I mean, I was hearing a guy from the Times the other day on Times Radio saying that when he goes out for dinner or goes around to somebody's house for dinner, he takes a bottle of olive oil because it's actually it's so expensive. It's actually quite a nice gift to give people. The cost of that is prodigious now, and everything that you thought was only going to cost you £1 last time now costs practically £2. So the actual real rate of food inflation is probably more like 50% than it is 4%.
Well, I'm not convinced about that. There are plenty of private surveys that aren't being manipulated that show that overall food inflation is probably running at about 4 to 5%. But what you say does illustrate.
Yeah, but I don't think they're right. I think they're wrong because I don't know how much shopping you do, but every time you go to the shops, everything costs more money.
As I say, overwhelming evidence, I'm afraid that's simply not true. Of course, you always pick individual items like olive oil and coffee and cocoa where the prices have risen significantly, mainly because of global factors. But overall food price inflation, I think, genuinely is running about 4 to 5%. But the broader point, and you're right to flag this up, is that these are prices that people are particularly aware of. Because, of course, we all do a weekly shop or more often, 2 or 3 times a week. So people are particularly sensitive to higher food prices. And of course, also, if you're on a relatively low income, you probably spend more on food than you do if you are on higher incomes. So higher food inflation has a disproportionate impact on the less well-off in society. So I think it is very right to be concerned about food price inflation. But of course, it's nothing that the Bank of England can do about that. The Bank of England can't set interest rates to control food inflation because the problem is driven by costs, not by demand.
Well, it is,
the Bank of England, I don't think should be raising interest rates. Indeed, it should continue to be cutting them, even though food price inflation is too high.
Well, that's the thing. I mean, there's a story in The Sun today about the cost of Nescafe Original, right? Instant coffee, same with its decaf alternative. Data from retail insights firm Trolley. Jars were being flogged for £4.50 in July last year. The same jar, which is actually marginally smaller, is gone up by 55% and is now selling for £7. Well, so when you've got things like that happening, and this is instant coffee, this is not a luxury item. This is something that people buy. Even if you're only buying, 7 or 8 things every single week, if one of those things has gone up by 55%, how on earth do you get to a 4% level?
Well, I would start by looking at the breakdown of the official inflation numbers. They do show big increases in individual food prices, including coffee and cocoa and so on. But that's offset by smaller increases and in some cases falls.
Yeah, but in order to offset 55%, Julian, I mean, you know better than I do about numbers. In order to offset 55%, you'd have to have things going down in price to get back to 4, wouldn't you?
Okay, well, how about this? I'll write something on social media, on X later, looking at the breakdown of the official inflation numbers, and I think they are right. There's one additional factor, by the way, to take account of, is that a lot of times, of course, there are also discounts available which aren't reflected in the official numbers. So that's one way in which the official numbers might actually be overstating food price inflation.
Well, I don't know. We may have to argue about this over a longer time, over a pint of very expensive beer. Julian, good to see you. Thank you very much indeed. Independent economist.